Namaskar. Let me ask you a question. Is it really possible to earn 50,000 rupees per month from intraday trading? Does it sound like a dream or something only professional traders can achieve? Well, today, I am here to tell you, it is absolutely possible. But there is a catch. You need the right strategy, discipline, and a clear plan to make it happen. Think about it. What if I told you that with just a few simple rules and by following the rhythm of the market, you can make consistent profits, day after day? You don't need a fancy degree, you don't need advanced software. What you need is a smart approach and a mindset focused on learning. In today's video, I am going to reveal a realistic, actionable plan to earn 50,000 rupees a month from intraday trading, even if you are starting with a modest portfolio. This isn't a get-rich-quick scheme. It is a disciplined approach that professionals follow to make consistent returns. And yes, you can do it too. But first, don't forget to subscribe towards Samriddhi. There is a lot of exciting content coming soon, including live trading sessions where I will demonstrate how professional traders work in real time. So hit that subscribe button and be part of our community. This strategy focuses on discipline, patience, and keeping your expectations reasonable. In the market, there is a simple mantra. The less you expect, the more the market gives you. The more you expect, the less the market provides. I have seen this play out time and again. So, keep your expectations reasonable, and you will find more success in your trades. I will show you a realistic process and strategy to achieve it. Trust me, it is not difficult, but it does require 3 things. 1. Discipline. 2. Experience. 3. Training. If you maintain these 3 qualities, earning 50,000 rupees a month from intraday trading is very possible. In this video, I will explain exactly how a day trader can make this happen, step by step. Now, let's dive into the strategy. Over the years, I have followed 2 key rules for intraday trading, and I still stick to them today. Rule number 1. Don't try to anticipate market moves. Many new traders fall into the trap of picking stocks that have been down, hoping they will rise. But often, these stocks don't have enough volume or movement to make a significant recovery. Avoid this mistake. Instead, focus on stocks that already have momentum. Here is a very effective tip. Pick stocks that are at least 2% up from the previous day's low. If a stock hasn't moved up by 2%, let it go and move on. This ensures you are only trading where there is action, giving you better chances to make profitable trades. Rule number 2. Follow the market's rhythm. The stock market has its own rhythm, like music. Your job is to move in sync with it. If the market is trending upward, take long trades, that is buy first, sell later. If it is trending downward, take short trades, that is sell first, buy later. The key is not to go against the market's movement. Recognize the rhythm, hear the tune, and dance to it. Let's break down how you can realistically earn 50,000 rupees per month through intraday trading. There are around 20 trading days in a month. To reach 50,000 rupees, you need to make 2,500 rupees per day. Most intraday traders take 4 to 5 trades in a day. Let's assume you take 4 trades a day, which gives you 80 trades over the month. Now, you only need to make 625 rupees per trade to achieve your daily target of 2,500 rupees. But remember, not all trades will be winners. With a 70% success rate, you will have about 56 profitable trades and 24 losing trades in a month. Here is where the risk-reward ratio comes in. A common ratio for beginners is 1:1.5, meaning you aim to make 1 rupee and 50 paise for every 1 rupee you risk. For instance, if you win, you earn 1,275 rupees per trade, and if you lose 850 rupees per trade. This strategy is achievable with discipline, and as you gain experience, your ratio can improve to 1:2, allowing you to make 2 rupees for every 1 rupee at risk. Now, let's see how this works out for earning 50,000 rupees per month. One of the most important aspects of successful trading is stock selection. Let me explain how professional traders select their stocks using a step-by-step process. 1. Select the sector. The stock market sees sectoral rotation regularly. Some days, the motor vehicle sector will have movement, other days it might be PSU banks or the sugar sector. You need to identify which sector is active and focus on that. 2. Select the stock. As I mentioned earlier, look for stocks that are at least 2% up from the previous day's low. This ensures that the stock has momentum. 3. Right entry point. Now, look for the right entry point, usually based on a range breakout or price action movement. Let me walk you through an example of how I execute this process in real time. On a particular day, I noticed movement in the textile sector. I then looked for a stock in that sector which was 2% up from its previous day's low. I found ABFRL, Aditya Birla Fashion and Retail Limited, which had a previous day's low of 329 rupees and 45 paise on 8th October 2024. I was trading on 9th October 2024. That morning, ABFRL touched an intraday high of 336 rupees and 85 paise, which is 2.25% up from the previous day's low. This met my first and second criteria. Next, I looked for the right entry point. I saw that there was a breakout zone at 336 rupees and 35 paise. I placed a buy order at 337 rupees, anticipating a breakout of the resistance at 336 rupees and 35 paise. I also watched there was a rising volume build-up. Soon after, the stock broke the resistance, and my order was executed. I bought 225 shares at 337 rupees. After the breakout, the price started moving upward. It formed a bullish Marboju candle and reached an intraday high of 344 rupees and 40 paise. I then noticed the formation of an inverted hammer, which signaled a possible reversal. At that point, I exited the trade at 343 rupees. Here is the breakdown. My target was 1,250 rupees per profitable trade, and I exceeded it. I then moved on to look for my next trade. As you have seen, when you have a clear goal and a disciplined approach, you can achieve your target. Also, notice that I don't rely on complicated indicators. Too many indicators can confuse you. I only use price action and support resistance levels. Keeping things simple allows you to make decisions quickly and without hesitation. If you want to learn more about price action trading, check out our free detailed course on Towards Samriddhi. Just type Towards Samriddhi in YouTube's search box, click on our channel, and go to the price action playlist. You will find short, easy to follow episodes in English, Hindi, and Bengali. I have added the link in the comments section. If you found this video helpful, don't forget to subscribe to Towards Samriddhi for more smart investing content. Let us know in the comments what topics you would like us to cover in future videos. Together, let's move towards Samriddhi and start your journey to wealth today.